Welcome to Coffee and Crypto with Lee and Jimmie. I am Lee Reiners, joined as always by Jimmie Lenz. Good morning, sir.
Good morning, man. Good fall morning. This is my favorite time of year. I have to tell
Really?
you, fall, love it. Absolutely love it.
I
And
thought
it
you were a
feels like it
summer
outside.
guy.
No, I'm a fall guy. I love fall.
Really?
There's nothing like cooking a whole hog in the fall. Yeah, nothing like those big barbecues that you have when you were a kid. Well,
I hear you.
I lived in a different area than you did,
Yeah, I grew up in
where we
Minnesota. We
cook
weren't so
whole
much
hogs.
as well. We love fall up north too, but not too much on the whole hog side.
Yeah.
Yeah, it definitely feels like fall. We'll see. It's North Carolina though, so who knows? Next week or 2 weeks from now, it could be back up in the 90s at this.
Could
But
happen. Could
it
happen.
does feel like
Great
we've
golf weather. Great golf.
yeah.
Speaking of golf tournament, digital assets at Duke.
Digital assets at Duke, baby. So the early bird registration discount is expiring soon. It expires on October 15th. So if you haven't registered yet for digital assets at Duke, you need to go now. All right. Hit pause. Okay. Go to your computer, go to your phone, digitalassetsaduke.org. Okay. And make sure you register. And if you golf, we're going to have a golf tournament Wednesday during the day. Okay. Make sure you register for that. You can rent clubs. You can bring your own clubs, whatever you need, but be there. We want to see you on the first tee come Wednesday, February 4th, Jimmie.
Yeah,
Right, that's when we kick
if you
off.
haven't played, if you're a golfer and you don't have to be like a scratch golfer. I mean, Lee and I certainly aren't. But if you haven't
No, we're
played
not.
the Duke course yet, it is a really really nice course. This is a Robert Trent Jones Jr. Designed back in the day, and I mean it's a beautiful course. It's a little bit challenging, but always fun to get out with some of the folks from Digital Assets. We had a really nice group last year, and we plan on doing it again this year. So, yeah, definitely sign up for that. But sign up for get the early bird special. No reason to pay a premium.
And we're adding new speakers, great speakers, by the weeks. Yeah, so make sure you get on the site, get registered, so you don't miss out. All right, with
Somebody
that,
was asking me
yeah.
this about the speakers the other day. They're like, "Hey, do you do that on purpose? Just kind of piece them out so people just get a little bit at a time, a little bit at a time?" Yes, we do.
Yeah.
We do that. We definitely do that on purpose.
Yeah, we like to leak it out a little bit,
A little bit,
But
yeah.
yeah, we're not gonna go out of the gate with all the
No reason to go
speakers,
whole
okay?
hog, right?
That's right. So yeah, so make sure you sign up, folks. Okay, Jimmie, let's get into the stories for the day. A lot as usual, and
Big stuff
I'm sure we're gonna
going
leave
on.
more on the cutting room floor here. But we like product announcements, right? We did, a few weeks ago, we did our product announcement kind of episode. Big product announcement, right? Coming out of Sibos, right? The annual flagship conference hosted by Swift. Okay, the payments juggernaut, right? We can call them a juggernaut.
Yeah,
Okay,
I think so.
over there in the Belgium countryside. And so last week was their, as I said, their annual Sibos conference in Frankfurt. And Swift announced, okay, that they were going to work with 30 financial institutions from around the world. And these are the biggest names, okay? We have Bank of America, JP Morgan, ANZ in Australia. I mean, you got, wherever the country is, the biggest. These are big guys, okay? And they are going to design and build a blockchain-based shared ledger focused initially, okay, on use cases of real-time, 24/7 cross-border payments. And they're starting with a conceptual prototype by Consensus, right? Our friends at Consensus.
Yeah,
You're more friends with
Consensus,
them
which
than
is
I am.
I think that was a great partnership. I don't own anything in Consensus. I don't own any sort of investment there. But I mean, Consensus has been on the forefront for years. And for those of you who don't know who Consensus is, if you look at the founders of Ethereum, yes, there were multiple founders. Joe Lubin, who heads up Consensus, was a co-founder of Ethereum. So he's been in this game for a long time. He's an engineer by training, worked at Goldman Sachs for years, friend of the program that I run here at Duke. And they've been doing this for years now. So this isn't some fly-by-night company you never heard of before. I mean, this is if there are stalwarts in the blockchain ledger kind of space, Consensus is one of them.
Yeah, no doubt about it. I mean, this is two established names, right? One from the legacy world, one from the new world, right? Combining forces, obviously in keeping with a trend that we've been covering over the past year, 2 years, Jimmie.
Yeah.
Really Swift is focused on the infrastructure. That's what they do, right? Their infrastructure. So they are agnostic as to the types of tokens, okay, that will be exchanged via this protocol that they're building, right? Ultimately, the types of tokens will be based on commercial and central banks, right? Those are generally the clients of Swift, but Swift is just planning on providing a secure real-time log of transactions that will record, sequence, validate. It'll force rules through smart contracts. It'll be built for operability or interoperability, right? And it'll have the trust, the resiliency, the compliance that I think Swift is known for. So, what are your thoughts on this, Jimmie? I saw a good amount of chatter on LinkedIn about this, not seeing a lot in the kind of mainstream crypto press, if you
Yeah,
will.
not yet. Well, I
Not
think
yet.
I
I don't
saw.
think Swift is. I don't think a lot of people want to know what Swift does, frankly.
Yeah. Well,
And
I
this
think
is,
I think you're right. I think
this
that
is they're old. They're old.
they're
Their
old.
legacy. They're
They're
kind of
they're
their
they're part of
fuddy
the
duddy in
legacy
a lot of people's
infrastructure.
mind.
Yeah, no, you're 100% right. They're part of the legacy infrastructure. They're not part of the digital infrastructure. People don't know them. People don't recognize the name. They will recognize Consensus, but they don't
Mm-hmm.
recognize Swift. I think a lot of people. And so I mean I applaud them for taking the step and saying, hey, you know what, there are other infrastructures. There are better means to do what we do already. There are better ways to do it. I mean,
Mm-hmm.
technology changes, so why not adopt it and move forward? So I applaud him for doing that. I
Yeah.
was going to kind of throw it back to you though, and I mean, because you haven't been a huge fan of using blockchain for cross border stuff. I mean, what this is obviously going, has a different level than
Yeah.
just having a blockchain doing this. It's a Swift run. But what do you think about this? Because this kind of flies in the face of what a lot of people have poo-pooed about. Well, we don't want cross border. We need all this other stuff that's involved. And now the king of cross border stuff, Swift, is saying, "Hey, we're going to adopt this technology."
Yeah, one, we're just reading a press release, so I don't know.
Yeah, that's true.
I haven't had a chance to sort of dive in. I don't know if they have like a white paper or if there's more detail about how this is actually going to work. And remember, it's in the press release. It says conceptual protocol,
Right.
right? So, or a conceptual something. I forget what it is. But prototype, not
Yeah,
protocol.
prototype. Yeah.
Conceptual prototype, right? I kind of want to reserve judgment. Look, there's a history here of sort of legacy institutions doing blockchain-based pilot programs and then kind of getting, a little bit into it and recognizing this actually isn't working so well. I think the most famous example, of course, is the Australia Stock Exchange, which spent, millions upon millions of dollars to overhaul their infrastructure to make it blockchain-based and had to scrap that. I know IBM and Maersk had a blockchain-based pilot for tracking shipping invoices that they had to scrap. So, look, I think Swift, and we know some folks at Swift. They're as smart as it gets. They know payments inside and out. I think if they're
They've
going
been
to do it,
moving money for a long time.
they've been moving money for a long time, and look, there's no really margin for error, right, with Swift, because they're moving money for the largest financial institutions in the world, central banks, governments, right? So, their clients demand, you know, the highest level of compliance, secrecy, you name it. So I think if they do something, they're going to get it right. But it doesn't sound as though that they're sort of saying blockchain is going to transform everything we do regarding payments, right? And so
They're
we'll
not
see.
saying that, but we'll see. We'll see
We'll
what
see.
happens.
We'll see. And look, and we talked about this, I think, the other week, where, we're kind of getting to the point where it's like, is it even appropriate to use the term blockchain or DLT for some of these things, because they make so many modifications to accommodate the needs of the users, which is what business does. That's totally
Yeah,
fine and acceptable, right?
absolutely.
But these are very different conceptions of blockchain and uses of blockchain than, obviously the Satoshi, or, the original Bitcoin blockchain, right? So, something, if Swift's going to do it, it's not going to be open. It's not going to be permissionless, right? You're going to have, compliance. You're going to have to be able to reverse transactions, right?
Yeah.
So these are kind of all features that I think are anathema to, some of the kind of the crypto OGs and how they view blockchain. So, but if it makes it faster, and I think that's all that matters, right? So, this is what markets do: is they take the bits and pieces of new technology that suits their needs and their customers' needs, and they discard the rest. And there's no reason to complain about that.
Yeah, no, there's no
So we'll
reason
be
to complain
monitoring this,
about
and
it.
we're going to reach out to some folks from Swift to see if we can get them at Digital Assets at Duke to
Yeah,
talk about it, man.
I think we have to. I think we have to. This is kind of a sea change. The fact that it is a very traditional organization, I mean, kind of lends itself to what I'm seeing in a lot of other spaces. We're going to talk a lot more today. We have a lot
Yeah,
of other things going on, but
no doubt.
man, I'm seeing more and more traditional entrants into the blockchain and
Well, that
digital
is a
asset
nice
space, and
segue.
they're kind of taking a big chunk of it.
The innovator's dilemma. We were talking about that before we hit
Yeah,
record here, right? These incumbents do not want to be innovated out of business. So
yeah, can't
in
can't afford to
keeping
be.
with can't afford to be in keeping with that story, Jimmie, Intercontinental Exchange, ICE. Okay, they're the largest
Owner of the NYSE and like 20 other exchanges around
the
the world.
largest
Yeah.
exchange operator in the world, earlier this week said that they were going to invest up to $2 billion in the prediction market platform Polymarket,
Yeah.
in a deal that would value Polymarket at roughly $8 billion. Obviously, this is a big vote of confidence. ICE is going to pay for the deal in cash, right? $2 billion to them is pocket change to you and I, right? And look, I mean, there's a lot of things we could talk about regards to this story, Jimmie. You and I think we've touched on kind of prediction markets a little
Yeah.
bit
A little
in
bit.
this. These things are booming, man. And I
Oh,
can tell you, and I don't know if
I'm like
when
shocked.
you talk to your students, but young people are on these platforms.
They're all over them.
These are, for those of you who aren't familiar, so Kalshi is a big one here in the US, and then Polymarket. So it's Kalshi and Polymarket are the two big ones. And these are essentially binary options contracts. So you can predict the outcome of an event. And famously, it was who's going to win the 2024 presidential election. But you can go on these platforms, and there are contracts for any conceivable event out there.
I mean, the level of detail is Rory McIlroy going to hit a 6-iron or a 7-iron on the next shot? I mean, that's how detailed you can get.
It is crazy. And so and then obviously based upon the trading activity, it'll show you essentially a percent, kind of the cost. It'll be from 0 to 1. Okay. So, let's say it's a highly, likely event, right? It'll be close to, the 90 cents, right? So you pay 90 cents. If you're correct, if the event happens, you get $1, right? So and then if it doesn't happen, you get 0. Okay. So that's generally how it works. These things are absolutely exploding in popularity. There are markets, as we said, on anything, and they're becoming integrated, Jimmie, with TradFi firms. So
Yeah.
Robinhood famously has a partnership with Kalshi. So you can, via Robinhood, via the app, via your laptop, you can go to Robinhood. You can access these event contracts. The parent company of FanDuel recently announced a deal with CME. We haven't talked about that, but Chicago Mercantile Exchange. So they're going to use CME's platform to offer a greater suite of event contracts, and which will be cleared and will be centrally cleared, via CME's clearing agency. And now ICE is seeing obviously which way the wind is blowing and getting in on the action a little bit. I thought it was telling that they said that they would use that ICE would distribute Polymarket's event-driven data. You know this as well as anyone, Jimmie. How do these exchanges make money? It's data.
The data,
right?
all the data. People think it's something else. People think it's trading fees. It's like, no. It's data. That is how they make money.
And so ICE recognizes that. Really, look, and gosh, we could do a whole episode on this.
We probably could.
I was kind of ranting the other day. The distinction between investing and gambling I don't think it really exists anymore, frankly.
No.
I mean, it is blurring by the day, and we can now on these prediction markets you can bet on football.
You can bet on anything.
You can bet on anything, and and obviously that's a separate kind of issue because at least Kalshi is regulated by the CFTC, and they argue that gives them preemption over state laws, which states historically have regulated gambling. So some of these sports books and tribal casinos are pushing back and saying, wait a second, we have state laws governing this stuff. So it kind of feels like the complete Wild West. Look, everything is moving towards what Paul Atkins in that famous Project Crypto speech called the super app, right? Everyone is trying to get to the super app, the place you go to buy stocks, buy bonds, buy and sell derivatives, event contracts, sports bets, right? That is the race. It is an absolute race right now, Jimmie, to be that platform that does it all.
Yeah, does it start? Is it starting to feel a little bit like Biff's World? Remember the
Yes,
movie
and
Back to the
dude,
Future?
I love that you said this because I made this point in my class last year, and I
Did
was like,
anybody know what you were talking about?
one student registered what I was talking about. So
It
it is
feels like it a
totally
little bit, right?
so Back to the Future number 2, the second
Yeah,
Back to the Future, Biff's World, where he gets he got the sports
the
almanac.
sports book. Yeah,
He
yeah,
got the sports book, and he goes into the future and makes a bunch of money, betting on these sports outcomes. And it's like everything is financialized, right? It's like this like seedy, casino world, the town, I forget the town. Um, it absolutely feels like that, Jimmie. It is the financialization of everything.
everything, everything.
Everything.
Yeah, yeah.
Everything is an opportunity to speculate.
Yeah, it feels like that. The other
It feels
one,
gross. It
the
feels
other thing
gross.
that kind
Doesn't
of,
it feel gross to you? I mean, I know
yeah, yeah,
you're
yeah.
a
No, I'm with you. I'm with you on this. That's why I use that analogy because I didn't like Biff's World either.
I didn't like no one liked Biff's
You know,
World.
I
That was the
wouldn't
whole
want to
point
live
of
in Biff's
the
World.
movie was that Biff's World was a nasty, yucky world, right? I
Yeah,
mean,
yeah,
come on.
but it still had it.
Michael
But it
J.
still had
Fox
all these
warned us,
people.
people. Michael J. Fox, watch Back to the Future 2. Okay.
Yeah, yeah. You should definitely watch it, and you'll know what we're talking about. You know, the other thing that kind of stood out to me about this was that I mean, ICE could have used a couple of different entities to do this, right? Because they own a lot of exchanges, but they profiled the New York Stock Exchange, or maybe it just said the owner of the New York Stock Exchange. Maybe it's the way the press wrote it. I feel like this is I was talking about this not very long ago. Feels like a desperation move by New York Stock Exchange. They haven't done anything innovative in years. I mean, nothing. NASDAQ, different story. I mean, every week we see NASDAQ coming out and doing
A
something
hot
cutting
take.
edge. I mean, but it's been like that for the last 2 or 3 CEOs that NASDAQ has had. You see them like on the, out there all the time. Does everything work? No. But they are on fire. They are doing all kinds of things. And New York Stock Exchange, nothing. I mean,
Yeah.
absolutely nothing happening. And so, they made this investment, although is it really the New York Stock Exchange? I guess they'll be the cash for the data. But I mean, I don't know. It feels a little bit desperate to me, doesn't it to you?
No, I think desperate is too strong an adjective, to be honest with you. I would say it's a flyer. They're taking a
Maybe.
flyer.
Yeah, maybe a flyer. Maybe a flyer.
I'm
That's
saying they're taking a flyer.
yeah.
$2
$2 billion
billion.
though. I mean, that's not chump change.
Come on.
Well,
Well,
I
to
know for
you,
those
I
guys it
mean,
is, but
for
for
those guys, it is. I think it is a flyer for them. They want to kind of get their, dip their toes in the water, learn a little bit more, and then maybe there's an opportunity to grow. I just don't know, like a Polymarket. And why is we talking about Polymarket on digital asset, on a crypto related podcast? Well, because they use the Polygon blockchain. I mean, they're
right,
using,
right.
they claim at least that they're, everything is blockchain based and smart contracts and whatnot, which is different than Kelshi, which I don't think is actually using crypto. And everything on Polymarket is USDC, settles in USDC. And there's talk now that I think they actually might have their own coin, Polycoin. I think this is, if you're ICE, this is a way to get exposure to event contracts, to blockchain infrastructure, to tokenization, things like that. So so it may be worth it. Fun fact, Jimmie, we'll end on this is about 2 weeks ago there was a joint roundtable, SEC CFTC harmonization roundtable, where there was a series of panels all kind of about how the SEC and CFTC can work together more closely, especially in the realm of digital assets. And I actually watched a couple of the panels, which were super interesting. The most interesting one was they had the platforms up on stage. And so they had Terry Duffy, the CEO of CME. And I've never met the guy. You probably met the guy, but I love listening to him talk, man. I mean, just what a wealth of knowledge. And he doesn't BS, man. I'll put it that way.
No, straight shooter.
Yeah, straight shooter for sure. But they also had Shane Copland, the CEO of Polymarket, and seated next to him at the event was Jeff Sprecher, the CEO of ICE.
Nice.
And obviously, I'm assuming that they had initiated conversations about this deal prior to that, but it wasn't public yet. So it was, they were kind
Maybe
of
they went out and
sharing
got a coffee and decided, hey,
maybe after the event, they're like, hey, let's go talk. So so we'll keep an eye on that. But it does feel like we're heading to Biff's world, and I don't like it, man. I'm not. But what can I do? I don't want to tilt that windmills. I don't want to be an old man. Get off my yard. I'm too young for that. But I don't have to also pretend that it's okay.
No.
So, all right, Jimmie. Well, let's talk about a product that I think you and I we have differences of opinion on, but look, it's been a trend. It makes sense, right? If you want to get crypto exposure, you're going to do it via ETF vehicle, right?
You got to do it. Got to do it.
Got to do it.
I mean, ETFs. I've been talking to my students a lot about it. I'm teaching a quantitative investments class this semester, and so we talk about actually using quantitative methods to choose investments, and then investment strategies that are more quantitative based. So some of the pairs trading things and some of the momentum strategies and those kinds of things. So anyway, we're going through all of these things, and we're talking about these in in a number of different ways. And as we're kind of going through this, as we're kind of traversing all of this thing, one of the things that everybody is seeing is like, wait a minute, things are starting. We're seeing this correlation increase over the years, and the students were asking me, why do you think we're, what's happening there? Why are things becoming more and more and more correlated? It's like ETFs and indexes. That's why there are more ETFs than there are underlying assets on the New York Stock Exchange. And so everything, so that every time somebody is buying an ETF, they're buying a certain percentage, a certain ratio of all these different stocks, right? These things have to start trading together. And so the proliferation, but I mean, there's a reason that people buy ETFs, right? They want exposure to the market. They're not going to pick stocks. And we see over time that if you're kind of a buy and hold investor, that wins out every time, right? And nobody can come close. And so I think that, this idea of using ETFs, one, it's obviously for their purpose, it's a better vehicle, but also, I mean, that's what the public wants is ETFs, and not just the public. I would say the investing public, so retail and institutional, is they're captivated by ETFs.
ETFs are the way to go, man. Tax efficient, certainly compared to mutual funds. Way more tax efficient.
Way cheaper. Way cheaper.
The cheaper. The fees.
Lower.
I mean, the fees. There is a just growing body of evidence that fees are ultimately going to be the biggest determinant of portfolio returns over time. And ETFs give you the lowest fees. They give you liquidity, intraday liquidity. So there's just a lot of reasons why, and they're regulated, right?
Yeah, they're regulated.
And they're regulated, and so that kind of it brings me to the topic, Jimmie, which is the other week. This is a few weeks ago, so it's about a little under a month, right? But I wanted to talk about it with you. The SEC voted in September to approve rule changes by 3 national securities exchanges to adopt generic listing standards for exchange-traded products that hold spot commodities, including digital assets. So the way it worked previously is that exchanges, if they wanted to list a new ETP, specifically a crypto ETP, would have to file a B4 form with the SEC, and that would then be put under review. Basically time-consuming, tedious.
Very time-consuming.
And the SEC has now essentially created a fast-track process to allow these exchanges to list crypto ETPs.
Well, list all
at this point, there's a lot out there. I don't know, and I'll have to read I haven't actually read the generic listing standards, so I don't want to kind of give a definitive, this is good, this is bad answer at this point. But I think just given the volume of ETPs that already exist for crypto and that are in the pipeline, it probably makes sense to do something like this, just given the, as you said, investor demand.
Yeah.
Right. So with that, Jimmie, let's keep it going with crypto ETPs.
Yeah, I mean, right? I think we're well. The one
Grayscale.
thing I will say is, this is going to go further than just digital assets. This is for ETPs, and we could see other types of investments going into these, right? I mean, this is not, it's not exclusive. It wasn't done just for crypto. It could definitely, we could definitely see an increase in other types of things that are out there. It's not a huge deal, but we'll see how this comes about. These things, I mean, it's funny. I was at a conference, a finance conference, I don't know, a while ago, and I was talking to a guy from one of the really big companies that does this, and I'm not going to tell you who it was, but it was a company that is very involved in creating exchange-traded products. And I asked him, it's like, hey, how many of these do you have on your drawing board right now? And he's like, a dozen. I'm like, you have a dozen of these?
Yeah.
What the hell are you, what are you, but he's like, well, I can't really tell you, but he's like, I said, is that a lot? He's like, we always have a dozen. He's like, we're always working. So, I mean, these continue to proliferate. I don't know if this will, increase the speed of these things, but I mean, we're seeing a lot of them out there. Obviously, it's, if people weren't buying them, they wouldn't be making them. But, as you said, there are a lot of reasons to buy these.
It's freaking happening, man.
Yeah.
So speaking of a bit of a milestone in the ETP space, and look, folks, there is a technical distinction between exchange traded products and ETFs. I don't think a podcast is the appropriate
Probably
forum.
not the best place. No.
It would be quite boring, and it's very nuanced. High level. Exchange traded funds under U.S. law refer to a fund structure generally registered on the Investment Company Act of 1940. So it has to comply with a lot of different rules around diversification, liquidity, redemption mechanisms, operational constraints. Exchange traded products is a broader umbrella term. It includes ETFs, but also other exchange listed products. So a lot of the crypto products we're seeing are technically ETPs, have been ETPs and not necessarily ETFs. The SEC for a while now has kind of been considering, well, geez, for the ETF structure, should we allow staking rewards, right? For proof of stake blockchains, can we allow ETFs to do staking and then I guess distribute those staking rewards in the form of dividends, or how does that work within the ETF structure, right? So we've seen a bit of movement on that front. Grayscale has introduced staking for its exchange traded products, not ETFs. They're
Right.
they're ETPs. Okay. So they said, I think this was last week, Jimmie, October 6th.
I think it was about a week ago. Yeah.
Yeah. So they said their Grayscale Ethereum Mini Trust and Grayscale Ethereum Trust are now the first U.S. listed spot crypto funds to offer staking. They're calling this development another first mover milestone. Obviously, Grayscale is a huge investment manager. Mike Novogratz, kind of famous in the crypto world. It does seem as though we are moving, Jimmie, towards allowing fund structures to offer staking rewards, right? I don't know if you have thoughts on that, or if it's like, you got to be careful though. You don't want to, staking implies risk.
Staking definitely implies risk. I mean, and I think there are more risks to staking than sometimes people realize or people understand. Staking means that you are pledging a security for sometimes a period of time. It can get locked up in these things, and all of a sudden, something goes down in value, or shorts out, whatever. So there is definitely a risk there. I think you should understand really well. Don't take everything at don't look beyond the advertisement. I'm not saying there's anything nefarious or anything like that. Just understand. You should understand what exactly you're getting in for. I've questioned a lot of guys around staking and different sorts of staking protocols and things like that. And a lot of times I hear answers that are like, well, you just don't understand finance. It's like, really? I've been doing this for 25 years. I think I kind of understand it.
What are some of those questions?
Huh?
What do you ask? What are some of those questions you ask?
Well, when staking was really hot there for a while and they were paying out outrageous fees, it's like, okay, so if you're paying out these outrageous fees, somebody's borrowing at a higher fee than this. Who? And, almost all of these things collapsed at some point. I think they're just be very, very conscious of what you're doing. If you're getting returns that are just outrageously high, you got to ask why. I mean, because there's somebody else out there borrowing at a higher rate.
Yeah.
Who is borrowing at a higher rate, than they're paying you? I mean, ask yourself that question. If I'm doing a money market fund, for instance, and it's paying out 4.5%, I can say, yeah, I can look and see, hey, yeah, T-bills are now at 5%. So yeah, the U.S. government, that's fine.
Yeah,
I get it. But somebody's paying you out 15%. Who's paying 16 or 17 or 18% to borrow this asset? You better ask yourself that question.
Yeah, and when you do within a fund structure, and this is where I think the SEC, as crypto friendly as they are really bogged down in trying to understand and address some pretty nitty gritty details here. Look, it makes sense to want to do this within a fund structure because, as the more layer one token you stake, let's just go with ETH, right? The greater the probability that you will earn stake rewards, right? That's just how it works given the underlying code. So yeah, I mean, if you can kind of pool a lot of different ETH, then yeah, it makes sense. But then that means if you get the rewards, there's NAV goes up, and then how do you get the authorized participants to engage? Because the whole point is that the share, with the fund structure, is that the value of the shares is equal to the value of the net assets in the fund, and then you have authorized participants who sort of arbitrage away that difference, but they need to know, like, okay, are there rewards? Did the fund get the rewards, or was there any slashing and whatnot? So there's just a lot of things that have to be worked through from a technical standpoint. And, if you're going to buy these, don't just assume, when they come to market that, oh, well, great, this staked ETF is going to give me, a higher yield or higher return than, whatever the non-staked version. Like, read the prospectus, figure out what's going on, know what risk you're being exposed to, because these are, for at least the staked products, these are novel. Okay. All right, Jimmie, let's move on. ETFs, if we're going to grow ETFs, you need indices,
Yep.
right?
Yep.
That's
You
the whole
have to
premise.
have indices. And boy, there are some companies out there that are just known for their indices, like S&P.
Like S&P. And so earlier this week, S&P Global announced plans to expand their Dow Jones indices, their crypto index offerings, with the launch of S&P Digital Markets 50.
Right.
Jimmie. Okay, so there's a new index. There are other crypto
This
indices
is a
out there.
novel construction.
It is very novel because it's combining 35. So obviously the name 50. So there's sort of 50 entities, I guess, lack
50
of a better
assets,
term.
50 different
50
unique
assets, 50 assets that make up the index. 35 of those are companies, Jimmie,
Yeah.
are actual companies
They're companies
involved in digital asset operations, infrastructure, financial services, blockchain applications, and supporting technologies. And they'll be combined with 15 cryptocurrencies.
Yeah.
Okay. So now we have an index that's combining companies in the digital asset space with actual digital assets. And, and I'm sure we're going to see ETFs that now track that index, right?
Yeah,
So, I
I
mean,
was gonna go and do some homework. I haven't yet to see if there are other indexes that include Forex and, maybe financial services companies or something along those
good
lines where
idea.
you get,
Yeah.
a similar. I don't think there is. I mean, nothing comes to mind for sure. And I haven't done a lot of research on it yet, but I was going to go and look. I mean, there are some that are just Forex and things like that, but that combine the two. I don't know. I'm very interested. I think to see. I'd love to see, and I'm sure they'll do a little bit of historical stuff, just so people who are doing this have an idea of what it might perform like.
Mm-hmm.
But I'm very interested to see kind of how this comes together, how this looks. I mean, this could herald a new kind of product, a new kind of index.
Yeah. Well, let's end on this story, Jimmie. We're going to move off of TradFi and into deep crypto land, man. Are you a DeFi guy? How do you feel about DeFi? True
Yeah,
DeFi.
I'm a DeFi guy.
All right. Well, okay, DeFi guy. So there's a big story that's kind of been making the rounds within the world of crypto around a decentralized exchange, a DEX, that was created by essentially a company CZ of Binance fame controls, called Aster. And Aster was just booming in trading volumes, perps, primarily perpetuals. Okay. Now we have talked about Hyperliquid before on this show.
We have.
And it's because of their the bake off they essentially did for a stable coin, right? And so some folks online were starting to look at Astra's trading volume and saying, this is looking a little fishy.
Yeah.
Right. And specifically, there's a company, I don't know what you want to call it, called DeFi Llama. Okay.
Yeah.
They're a DeFi data aggregator, right? And so they, look at trading volumes on various, DEXs and make that data available, publicly available.
Again, the data thing, guys. Are you getting the theme here? The data.
The data, you got to have the data, right?
You got to have the data. Marketing
it's like,
the data.
Look, well, the thing people say, oh, it's all on the blockchain, blah blah blah. It's like, yeah, but you want it all in one place, man.
Yeah, you want it in one place. It's just easier.
Exactly. So, so they decided to stop reporting Aster's trading volume after they basically said it looks like there's some wash trading going on here. Essentially, the volume on Aster was mirroring the perpetuals volume on Binance. So essentially wash trading. So taking, a trade is put on Binance and then the offsetting leg is put on Aster, right?
Uh-huh.
To create the perception of volume. And so this has kind of sparked a bit of a debate around fake trading volumes within DEXs. Aster led all DEXs in trading volume on Monday, I think last Monday, with $41 billion in 24-hour volume, right? That's a lot, okay? Hyperliquid was recording over $9 billion. To me, Jimmie, this just all points to a lot of issues with DeFi around what's really going on, who's trading, are these volumes real, are they not real? I'm sure there's regulatory implications here. I mean, some of these bills floating around essentially have vast carve outs for DeFi. I mean, the volume that's being traded here is not insignificant.
No, not at all. This is not like, I think sometimes people think, oh, well, this is this little corner of the world where nothing's really happening. these have huge volumes. I mean, we're talking huge dollar amounts.
Yeah. Yeah. So how do you feel about this? Like if you're considering using a DEX, like what are some of the factors that you're looking at? What are some of
Well,
the data
I
points
would
you're
say,
looking at?
I mean, it depends on what I'm looking for, because there are DEXs that are more oriented towards, certain products or more friendly to certain products. And so those are the only ones that I really look at for certain kinds of things. But there are a lot of them out there. They are, they I guess at some point they kind of concentrate one way or the other, and maybe that happens naturally, or maybe people just gravitate towards like type things. I think the one thing that I am always wary of are things that seem like they could be problematic. I stay far away. If there's anything that even smells problematic, I stay far
Mm,
away. I don't
really?
deal with it. I don't take chances like that. I think that's one of the problems is, you do have things out there that, even if they don't, even if they aren't, even if there's nothing going on, it might not be as professional or as slick, or it might not be done as well. And I shy away from those things. And so anything that seems like, hey, wait a minute, volume's being pumped up, or, things are not looking like I would expect, I'm going to stay far away. And I think I'm not alone in that regard. I mean, all of a sudden something gets a bad name, or, people start to question it. And the one thing about DEX is people do it very publicly when they start questioning it. People
Yeah,
aren't
yeah.
shy.
Just
People aren't
go
shy
on
about
X. Yeah.
putting it out there. I mean, it'll happen. And so, in cases like this where, things start to get delisted, all of a sudden people are going to know, hey, something, even if they don't have any reason to suspect something's wrong, they see those kinds of things, and it's like, I'm out. There's no reason
Well, you
not
have
to
options.
face that.
Going back to what we just talked about with ETFs and whatnot, you have
There are
options.
options. So I'm
And
going to stay away from it.
you and I are busy. People only have so many hours in a day. People don't want to have to spend, hours upon hours trying to investigate whether a DEX is legitimate or not, or, what's going, are they going to lose their funds? Are they going to get front runners? Whatever like that. Right. Most people just don't want to do that, spend that effort. Okay. And look, like once again, we have another example where, folks are questioning whether it's even appropriate to call this decentralized because this is backed by CZ. There's a link with
Yeah.
Binance, whatnot. So look, there's a lot going on behind the curtain here for a lot of these protocols. And it goes back to, you have to do your own research, folks, know what you're getting into. But look, you can buy a freaking, gazillion crypto ETFs now, ETPs, via Robinhood, via Schwab, and it might not go up in value, but you're not going to get scammed. Put it
Yeah.
that way.
Yeah. I'm kind of with you there. Maybe it's just I'm getting a little bit older, more conservative about some things, and
Well, you
it,
should be. That's
yeah,
that's how investing works, right? You should be, as you get
that is how
older,
it
you should
works.
become more
And
conservative.
do your homework. Do your homework for these things. Don't take anything for granted, folks. It just never works out well.
All right, Professor Lenz, that's a good note to end on. Always do your own homework. A lot of fun as always, and I look forward to speaking with you next week, my friend.
Absolutely. Have a great weekend.